Well, I think there's two things to keep in mind. One was AI gave us a very sudden boost. I mean, there was a lot of action there in a very short period of time, and the markets needed that. But some of that was just the fact those stocks have been depressed for some time relative to valuation. And now folks are looking at NVIDIA that was trading down this morning because maybe there'll be some export controls on this. But tech is bigger than one stock. AI is bigger than any one export control. And if you look where the tech rally is coming out, it's more broadly diversified, which is what we want to see. Despite higher rates, despite inflation, tech is still the growth stock. People are still going to go and buy more technology. We're not buying more horses. So inevitably, the names will continue to go and the rally will become more diversified.
The problem, though, with the growth stocks is that they are just that. They're high growth stocks that are priced for tremendous growth years out. And the problem with higher rates is that it lowers the present value of their future earnings. Is that not the case now? Should we not associate higher rates with it being negative for this high growth sector?
You're absolutely right. And the problem is the DCF models that folks have built for years to do this have said that. And they've always struggled to keep up with the fact that the rate of innovation continues to increase and the rate of consumer demand for these products has always increased. And we can continue to play with the discount rate in those models, but we're just moving numbers around on spreadsheets, which, by the way, those tech companies innovated and sold to us.
Yeah, fair point. I want to go back to what you said at the beginning, which is to do with the rally itself and how AI has been leading the rally in the tech space. But you did say that your expectation is that you expect there to be more diversification going forward. Where and in what format?
So we've seen some tech pullback, and indeed we've trimmed some of those names to take profits recently because some of those momentum names do need to take a breather from time to time. Right now, the medical device space and some of the more retail and more health-related technologies seem to be enjoying some much-needed airtime. We think that will continue to rally. And then some of the stalwart names, Apple, Microsoft, NVIDIA, to the extent that it pulls back some now, but Netflix, will continue to be strong performers.
What do you think the biggest risk to your thesis is? Because you do sound pretty bullish, and we were referencing earlier the story that came out overnight about the U.S. potentially restricting further chip exports out of NVIDIA to the U.S., not just NVIDIA, but other artificial intelligence chip makers as well. Would you say that that is one of the major risks, or are there others that you are thinking of?
Sure. So government control is always a risk for anything, whether it be in artificial intelligence technologies, commodities, or otherwise. But I think the biggest risk here would be, do we hit a fairly nasty depression era sort of concept, which I think is highly unlikely. As long as consumers have iPhones and Android devices and are buying items, we're going to find ways to serve more things up to them. But long term, my bullishness on this isn't over the next week or the next year. This was sort of the invention of the light bulb coming out, right? Technology stocks have been the electricity, and now we put AI through ChatGPT and the large language models, personalized it in a way we haven't seen. That's not a week-by-week trend. That's a decade-by-decade trend.
And what about regionally? Do you see any opportunity outside of the U.S.? Clearly, that's where all the concentration is at the moment when it comes to the tech leaders.
Certainly. I mean, right now, the chief innovation is sitting in the U.S. That's where the big names are. Anyone, you could hop in a London taxi and you're going to hear about Tesla stock. It just is what it is, as I did this morning. But from a more regional European standpoint, some of the industrial companies will absorb that, and that will start to supercharge their next phase of growth. But it probably first comes with a wave of consolidation. It's very hard to sustain that sort of a rally without concentrating the names. Notice when we talk about growth stocks, we're not talking about thousands, we're talking about dozens.